today's class, we're going to be looking at market structure and order flow. Because of the limited time that we have for this Zoom meeting, we're going to delve right in. So let me try and share my screen. Let me share screen. Okay, I don't know if you can see my screen.
Yes.
Which of them? Because I have 3 screens. You can see the one that has Zod group.
Yes, you can.
Okay, let me push this one here then. You can see trading view now.
Yes, we can.
Good. So now we are going to take our time. Even if this Zoom meeting ends, we'll start it again. Because this concept is something that you must understand from the very beginning. What we are trying to build here is not a strategy that will just kill the market once. No, it's a thought process. It's how you should approach the markets as a person and as a trader. So we were talking of market structure. What are we saying? Market structure is basically looking at the market as a whole, the structure of the market. You know, when we say something has structure, if we are in a college of law or something, or a school, and then you say, what is the structure of this school? You say, okay, there's the dean's, there's the college office where you have the dean, there are classes where you have the student, there are lecturers. So it's understanding the entire structure of the market. Now for Forex, we trade on charts. So each chart here, the whole chart as a whole comprises of the market structure itself. So now understanding the structure of the market is very important in trading Forex. In fact, the first thing that any trader should do when jumping into the market is understanding market structure. Now, within the market structure, we have what we call order flow. Some people also use the term interchangeably, either order flow or market structure. Order flows are orders within a structure. Now, let's go to like a weekly time frame. Each candle here now represents a week. So that is a structure. Each of these candles represent one week. So within this one candle here, we have different orders. Okay, now we have market structure and then we have order flows. Within this structure here now, this is a structure. This is one structure. We have order flows, meaning that the flows of, that's how did the money, how the price flow within this market structure. That's the way I like to define order flow. So if we have price coming from this range here all the way down here, we'll tell that there was a bearish order flow only on this one single market structure. I don't know if that makes sense.
Yes.
So how do we compute every of these 1, 2, 3, these 3 weeks now together? How can we now join these 3 candles, 1, 2, 3, to form or to be able to interpret a market structure and the order flow within these 3 candles? Now, scientifically, we understand this saying that what goes up must come down. Now we're going into teaching now. Now, this is just basically what the market does. It makes a series of higher highs, higher lows. Please mute your microphones. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now we'll call this what? A bullish structure or order flow. Right here. Why? Because it's making a series of higher highs and higher lows. Mark that as higher highs. Mark it as higher lows, sorry. Higher lows. Okay. So this is for a bullish market structure. You can see the market making a series of higher highs, higher lows, higher highs, higher lows, higher highs. Now, the market doesn't do anything different than what this is. And if we do it on the flip side, we have the market making higher high, lower low, higher low, lower high, lower low, lower high, lower low. So it's just the same thing. This now here is what we call market structure. Now, we have understood that the market makes a series of highs and lows and higher highs and higher lows, and same for bearish market. We can now understand first what market structure is all about. So let's go to, I think most of us love trading gold here. Now from this, what can we see here? We can see a low here. We can see a high here. We can see a low here. We can see a high here. We can see a low here. Higher high, higher low. This didn't take out this one. So we have a higher low here and another higher high, higher low, higher high all the way here. Okay. That is what is happening with this, with what we are showing in our drawing. Now, this is where it gets tricky. If the market was always giving us a series of higher highs like this, if the market was always giving us this, I mean, today everybody will be millionaires. Why? Because we'll just know that we'll buy here and sell here, buy here, sell here, right? Which now takes us to what we call internal order flow. So these now are just external order flows. Why? Because they are making series of higher highs, higher lows. So if we look at it from this point to this point, the next high that breaks this high is somewhere around here. So this will now interpret as this here. Here to here to here to here. Probably we can look for a low here and the next one can be somewhere above. Have we understood it up to this extent?
Yes. Yes.
Okay.
Yes.
Beautiful. Now let's move on. Within this external swing point, now get your biro and paper or something. Right, these are external swing points. Within an external swing point, we have internal orders or internal swing points too. Meaning that we already know that in a bullish market, the market is going high, right? So, but that point where the market retraces, from this level to this level where the market retraces, we also see that we have series of what? Lower lows and lower highs. So if we're looking at this point from here to here now, this is one swing point now, right? Let's see how we can zoom out on this. Where can we get that? Okay. Now we can see now that when we zoom into the time now, we left 4 hours all the way to 30 minutes, right? We can see what can we see here? We can see the market has started pulling backwards, right? Making series of what? Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Is that understood? Now, it will make it up until a particular point where you see that the market will start changing again to start making series of higher highs and higher lows. I'm taking my time to explain this thing because we are going to go very deep. So if you don't catch it from the ABC of Forex from now, you'll be able to miss track of it when we start getting deeper, okay? Now, the summary of what we have learned now is this. Market is making external movements from high swing points to low like this, like this. These are external swing points, external, meaning that we are taking them from what we can visibly see here to here to here, like that. Then within these external swing points, we have a series of internal movements or market structure making lower lows. So we have gotten that 2 points now. We have gotten external order flow and we've got to internal order flow. Now, when we are trying to, all this is one thing, no? All this is us trying to get market structure. All this is us trying to get the, okay, sorry, I need to admit somebody. Okay, so all this is us trying to get the market structure. That is, be able to predict where is the market moving to, where is price taking us to, where is the next point where price is going to be, okay? Now, having decided that this is an external point and this is an external point, and then we have seen that from this level to this level have series of internal structures that are also making lower lows up to a point, you ask yourself that what then makes this market to actually start reversing from this point? Because now we have this. Okay, let's use this for instance. We have this high to this low. We have this low to this high. I will see that market retraced all the way here and then started going up. You ask yourself then that what then made market, this price, to stop somewhere around this level and continue going upwards. So this is our point now, here to here. Two things that we'll do here, because I don't know how I'll approach this in a way to make the best sense. From every, because it will take us to our next topic, which is range structure. We have talked of external order flow, external structure, that's here to here, and internal, then now to range structure. Now a range structure is the distance between two swing points. So like here now we have this external order flow here and this internal order flow. So everything that happens from here to here is our range. So if you are looking for trades, we are looking for it within this range, right? This is where it gets easier. So if you are following, you understand it perfectly. Within this range is where we are going to be looking for a reversal. Normally they say that when the market rallies up, it has to get a pullback to at least 50% of your Fibonacci. So if we are pulling our Fibonacci and drawing it from this low point here to this high point, you see that 50% is somewhere around here. Though on this particular chart now, you see that price did not meet this 50%. And also those are the things of the Forex market. It will not always give you the 100% of what you anticipate it to do. But more times than not, you see it actually meeting the 50%, even going below all the way down to the 0.786%. Now, within this range structure now is where a smart money trader will be looking to get into a position based off of where the market is going to reverse from. I think we'll study that one in a later class anyways. But for today, since we're dealing on market structure, I want us to understand first the concept in details, the movement of price. Because if you are not able to determine where price is headed, then you have already failed every other thing. Every other analysis that follow will not work. So if you cannot tell that the market is bullish, then every analysis you are doing is wrong. Because for us SMC traders, one of the things that you want to do is that you want to trade in the direction of the overall market. If the market is overall, let's go to gold. Please mute your call. Sorry, I don't know what that is. Okay. So for gold now, what can we see in gold? You see that gold has made this triple top here. All right. On the weekly time frame, here, 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 here. So originally, it's expected that price can also get all the way down here. But don't forget that we're looking at this from a very big time frame. So realistically, you want to be going into things like the daily time frame and the 4-hour time frame. Now, from the daily time frame, what can we see here? We see that market here has been making series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. And then we see that there's the market still making a series. I don't want to go into that yet, but then you can see that the direction has changed. Market is now making a series of lower lows, lower highs, lower lows, lower highs. So what can we expect this market to do from this point now? Because now we have this area where first we must draw. Remember what we said, our external swing point first. These are external swing point from that swing, from this lower high to this lower low, right? These are external swing points. Now, second thing, what? You draw your Fibonacci to the 50% level. And you can see that price came into the 50% level and started what? Retracing backwards, right? So normally we would have anticipated, or normally it will anticipate that price is going to come and take out this level here, right? But what do we see? We see that it came all the way here and then it's still bouncing around here. Now this does not negate the fact that price can still come back here and take out this low. The important thing to understand now is from this level now, from what we have been teaching, if we reverse the market up to this extent, we had this swing point from this high, although we couldn't have told where this swing point would be. So let me take out this Fibonacci as well. So we had this level to this level. If this price goes below this level, we'll also drag this our stick down. So let's just take it back so you understand. Okay, good. So let's assume now that we're trading at this price. Now we're being realistic, right? Now, where was the last swing point here? Mr. Dolakbo, can you tell us what number the last swing low was?
On the chart, as we're looking at it.
Yes. The last external swing low.
Is at, I can't see it clearly from here.
Okay, but where should my cursor be?
Your cursor should go to the last external, should go down where it is. Yes.
Yeah, right. Very good. Thank
Yes.
you. So it shows that we're following. So this is our last external swing point. So from this swing point to this swing point now, this is our what? This is our range, right? This is our range. This is internal, and here to here, we now determine our range structure. Since we are going, in fact, this is supposed to be from here then. Hope you guys get why, because don't forget, we are looking for range. Here to here is our swing point. From this level to this level, this will now be our range. So we're looking for where market is going to come up to this range and then react on the range and start going down to take out this low. So if we are looking for a new low here, since this market has probably pulled up 50% of this range, we'll now say, we'll start looking for our low point. Now you see that here it has taken out this low. And what happens? Price start to reverse. So how we see that price has made a substantial reversal like this, what we can do is take this candle down here and then here. Do you understand? This now becomes our swing high and our swing low, our external swing high and external swing low. So within this internal order flow here now, we are looking for where price will likely get to before it start retracing downward. Why? Because the principal thing is that on our time frame, we are going bearish. So we shouldn't be looking for our price want to come and raid this, because this is now a strong high point and this is a weak low. Because we are on a bearish order flow, meaning that we are selling, the market is selling. So we shouldn't be looking for buy trades, we should be looking for sell trades. Okay, now we draw out our Fibonacci from this high point to this low point. And where's our 50%? Our 50% is resting around this level. Hold on, please, 1 second. Okay, so now these are 50% level here. I hope we can see the 50%. Let me try and see if I can extend it. Okay, look, now that's 0.5. So let's put this line here and take out the Fibonacci, or let's leave it. Well, these are 50%. So we're looking for how market can come within this area, which makes the 50% level before we can possibly see a reversal to the downside to take out this low. Now, let me fast forward it. Good. So you can see that here price has come above the 50 level. So this is where smart money traders will be looking for how to get into the market for a possible sell to take out these lows. Now these areas are divided into two. Anything below this 50% is called a discount level, and anything above this 50%, hold on guys, sorry, I have to. Anything above this 50% is called a premium level. So when we are in a bearish order, in a bearish market, that means we are looking for sales. We want to be taking trades from only this premium level. Then if we are in a bullish market and we're looking for buys, we want to be taking trades that fall within the discounted level. So right now we're looking for trades that fall within this premium level here. And as we can see from our fib, that price has traced more than 50%. So we should be looking for sales within this level. We're not going to get deep into where we're going to get sales from because of the topic of this class. This class is just for order flow and market structure. So we can see that after coming into this premium level, because now if you are trying to sell, if you are trying to buy something, let's say you want to buy a car, like a Lamborghini. We all know how much a Lamborghini costs. A Lamborghini costs about 200 and something million naira. So if it's going for maybe like if the price were to be auctioned, you want to fix your own like bidding around maybe 50 million naira. Okay. Whereas price here is all those 200, 210, 190, 180, 170. From here, you start getting premium amounts. That is amounts that are highly cheap. Something like instead of you buying the Lambo for something that's valued at 250 million, here you'll be pricing it at maybe 75 million. So that would be a very good deal, right? So that is it here. So price now has come within this 50% range, and then we can now see its reaction to start coming down. Now, how and why price reacted on this level will be, I think we'll discuss that tomorrow. We'll discuss that tomorrow. For now, I just want us to understand the concept of market structure, why price move the way they move. Now, the next thing we're going to learn, now I've learned external order flow, internal order flow. We've seen external order flow. We have seen internal order flow, right? We have seen range structure, which is the distance between here and here. Everything that's happening here is your range. So you're trading within this range. That's the thing. When you start trading smart money, when stuff is happening from this high to this low, you're not looking for how to be taking trades here. You are not to concern yourself with anything here. We'll study that when we're looking at time frame, multiple time frame. Why maybe here can be a place of interest, because here on the daily, we are looking at this range to this range. If we're to be using the weekly chart, then our swing point will be this high to likely this. It would depends. Let's take out this fib. If I look at it from a weekly time frame, our swing high would be from here to, it could also be here anyways. Why? Because if we still draw the Fibonacci, we can see that price has come all the way, has met 50% right here. And what happened? Price came and took out this low. Even trading, that's why most retail traders just use this Fibonacci to trade, and then they are good. But then before the end of our 3 weeks tutorials, we are going to be entering the market with more precision. Then now, let us delve into the last thing now. This will be something that is very important for us to learn. Let's go back to our 4 hour. Let's use this. Let's use this area. Let's clear everything. Now, if we look at this whole region here, right? Let's use this region. If we look at this whole region here, let me draw. Remember when we said that the market makes swing highs, higher low, higher high, higher low, higher high, higher low, higher high, right? We've discussed this and we understand this. Then within this market now, we've discussed about range structure. I'm just going in depth now. I would say range structure is where you see market doing things like this within this external swing point. These are internal structures, sorry. You see market doing stuff like this inside. Okay, you see it's changing now. The trend has changed there. All the way down, 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 down. So, okay, so without wasting time, hope you understood what's happening here. This now, let's change this color to, let's see, green. So this white line represents our market structure, giving us our external swing points from places like this area this area. This is our external swing point, right? Then our internal swing point or internal order flow, it's this market making series of smaller higher highs, higher lows, higher highs, higher lows, higher highs. And this will be significant areas also when you start coming down in your time frame. I don't know if that makes sense. So if you are looking at a 4-hour time frame now, we label this white line as 4-hour, right? This green line now would be something like 15 minutes. You get, this will be 15 minutes order flow within this 4-hour external structure. Does that make sense? Or do you want me to explain again, please? Please, I need response.
Come again, sir. Come again.
Okay. Now, if this white line is our external order flow, right? That's we're seeing that the market is making. Let's say we're on a daily time frame, right? Let's go to the chart. So let's say we're on the daily time frame. This is everything I'll be explaining since. So if you don't get this particular part, you will not really be able to trade Forex well. Let me look for something that looks a bit nicer. Okay, let's just use here now. So from the thing I just drew now, right? This is our external, because now we're looking at it from a very big time frame, right? So we see market making this kind of here. Okay, guys, we have just about 10 minutes left, so I think I would when it goes off, I will send another link across. Okay, now this is the external swing point. Do you understand that now? This low to this high, higher low, higher low. Then this, we are expecting that this place will take us maybe here, but in this case it has been broken somewhere around here, I guess. But we're expecting that it would have come here. Does that make sense? As an external swing point, right? Now within this external swing point, we have internal orders too. We have market making the same higher highs, higher lows internally, especially when the market is retracing. Like, let's go now to 15 minutes candle. Let's use 1 hour. I really wanted that line to show. Okay, good. Now you see that this line is still showing here, right? But in this line that is showing, what do we have now? We have another series of what? Swing points making lower lows, lower highs, lower lows. Well, let's use, okay, lower highs, lower lows, lower highs, lower lows, lower high, lower low. Do you understand now? Lower high and lower low.
Yes.
Are you seeing that?
Yes, yes.
Does that make sense now?
Yes.
Okay, good. So within our every external swing point, there's an internal swing point. Now the idea is understanding that we're overall, from the bigger time frame, we are looking for buys. We are in a bullish market. Do you get? So when the market is retracing backwards to find the, like what they say, accumulation, distribution and all that. So when the market is pulling back, we are looking for areas within the last range here and here where the market will now take off back to continue going up. So this is where this is a bullish external. So write this down. This is a bullish external order flow and a bearish internal order flow. Now, what we are looking for before we know that we are entering into a buy is the point whereby external order flow and internal order flow aligns. So if we keep on looking at this chart from here, we'll see that the alignment came somewhere around here, right? Where we now saw here making the series of higher highs, higher lows. So this is where you should be looking to buy, where both the external, that's this line, this green, mix or matches what with the internal. Are you understanding now? So
yes,
logically, it doesn't make sense that we are in this bullish order flow. That's on the bigger time frame we are buying, and then you'll be looking for sales. Fine, there are times you can look for sales within the pullback, but it's risky. Why? Because we already said that many times the market does not even get to the 50% level here before pulling back. In this particular external market, and we see that market got up to this 0.6, which is good. So this is a discounted zone. So the market could look to take it and take out this high point here. Is that understood now?
yes.
Okay. Sam, I don't know if you are following.
Yes, I'm following.
Okay, so now let's go back to that our drawing, this drawing right here. Okay, let me zoom in. So ideally, we ideally, like we have already agreed now, that for buys, for an external swing point like this, we want to be looking for an alignment between the internal order flow and the external order flow for us to be able to go into the market there. So how are we going to do this now is where we are going to, what are the semantics we are looking at before we go into this kind of market. Let me just delete all this one, sorry. Good. Now, from this my diagram is not really fine. Let me delete it. Anyways, from this our swing point now that we're seeing here, where the price is making a series of higher highs and higher lows. This comes here. Okay, good. Now, we see many times, we see the market do things like this. Oh, why is it doing like this? Oh, I think I need to zoom out. Oh, sorry guys, sorry. I wish I was using that biro that they use. I think, or since this is our first, the next class I'll get that biro by God's grace. Anyways, this is our external order flow. We have already discussed how you see markets making. Okay, let me try and use that biro here. It will not be too straight, but let's see how it works. So we see the market making things like this. Oh, this is worse. How do I explain this? Sorry, guys. Okay, I know what I'll do. Let's go into the charts directly. Okay. Now, let's look at, let's go to a 4-hour chart. Remove all drawings. Okay, good. Now, this is where our external swing point here. Hold on, guys, sorry. Looking for that area. There's an area where it looks so good for us to explain this. Anyways, now this should be our external swing point. From this low, follow me here because this is very important, please. From this low to this high. Okay, then we can see that the market is what? Pulling back to look for that 50% level. Now, how then do we know when the market is likely to pull back? That's what this class is about. This is what this subtopic is about. So now we're going to be talking about a break of structure and a change of character. Now, from this external point here, this external swing point, you see market makes high, low, high, low, high, low. Each time price breaks a previous high, we call that a break of structure when the market is following a particular trend. So in this trend, what do we have here? We have a bullish trend, right? So we can now say that at the point whereby price took out the previous high, we call that a what? A break of structure. We'll label it as BOS. Right? So anytime we hit break of structure, is this what this level is what normally retail and all that we call resistance level. Why? Because they believe that when price come here and start making some maybe consolidation, it's like double top and it's rejecting the resistance to go down. But when price breaks above this swing point here, we'll call it a break of structure. Then it will go and make a new high, put a new low here. And what happened? This didn't go down 50%. So normally we may even want to call that this high here is all the way here. But if you go to maybe 15 minutes, you see that there's a low here and a high and a low here. So this will be another break of structure here, right? But let's just be using the obvious swings. So from this high to this high, to this high here. we have another break of structure here. Okay, this is very important for you to understand, because if you don't understand the break of structure, then you will not really know where price is going. So now we're talking about break of structure. What happened? This high now, this low now, this was the low that put in this, this was the low that put in this high and broke the structure, right? So this is our new high here that put in this low. And what can we see? This low took out this high and put in a what? A new high right here. So that's where I had this break of structure. Now this high, this low here, this high now puts in this low, and this low is expected to do what? To take out this high. But what happened here? It did not take out the high. This is our new high point. This is not yet a break of structure. Relax. I want you to get this on. I want you to get this very well, because with this you have already solved like 20% of your trading. Each week we're going to be studying, we're going to be solving 25% of your forex problem. Now this is the high now that we need to be rated. Why? Because don't forget, number one, we are what? In a bullish market, so we're not looking for sales. So our anticipation, our high hopes is that market will come and raid this place. When market raid it, we'll be looking for how the price will come back down to a level where we'll buy again and raid the next one. That's just what forex is about. It's like, it's easy. You just have to be patient. So now we are looking at the gold chart, and we were discussing about break of structure and change in character. So on the 1 hour time frame now, or from this 4 hour time frame, we have been able to note that price has made this external swing point. Okay, that's from this low to this high right here. That's from looking at it from the 4 hour time frame, or on the daily time frame rather. Sorry, from the daily time frame. Then on the 4 hour candle, on the 4 hour time frame, we see the market making a series of highs, higher lows, higher highs, higher lows, and making these break of structures internally, right? Now, what do we see here? We see that this was the last low that took out this high, causing a new higher high here. But what happens? This higher high fails. This high takes out this low. So this now makes here a strong high and here a weak low. Okay, a strong high, weak low. The last high that takes out the previous low becomes a strong high, and that previous low becomes a weak low. So now this is a weak low and this is a strong high. That caused now a change of what? Character. A change of character, like I earlier defined, it's whereby a trend changes from one character, which is bearish or bullish, to another character, which may be bearish or bullish. In this example, we can see that price has changed from a bullish character to a bearish character. So that's the meaning of change of character. Now we want to be anticipating market making series of what? Lower lows and lower highs. So when this change of character happened right here, what do we see again? This is what is in the 4 hour time frame. Remember I told you I like to see a body close. All this week I see them as a sweep of liquidity, so I do not really use them to define my when I'm mapping out my structure. So I change of character here, and a change of character is usually followed by what? A break of structure. Now we see that this low, this was the lowest point here. This low failed to take out this high. Why? Because the body closed here. So what do we happen? And then this high, sorry, this low, sorry guys, remember this was the high that caused this low, right? So we're anticipating that price will come and take out this low. So after the retracement to this high did not take out this low. So this will be our low point. Let me just put this one here. Don't take too much cognizance of it. I just want you to see that nothing within this range took out this low. Instead, what do we have? We have price coming here, making this series of consolidation, and they're coming out to take out this high at this point. So we have a change of character followed by another change in character here. Oh, I thought I can clone this. Let's duplicate. It's supposed to show that. Okay, let me just write it here. So we have another change of character here. Hope we understand. If we don't understand, you can ask question. Now, don't worry about all this here. Like I said, if we're using a smaller time frame now, like 3 hours or 2, no, like 15 minutes, you will see that within all this also, we would have possibly had a break of structure here, maybe a change of character from this point to this point. But since we are looking at this swing point to this swing point, the next change of character or break of structure happened here. So the character changed here. I think the transformer is still blowing. That's crazy. Sorry, guys. So now what do we have? We now have this low. So now I can delete this. We have this low to this high. Now, who knows this high? Remember, this is our what? Our daily high. Now, let's step back a bit, because now I want you guys to see how this will merge. Now you see that it makes more sense now. Imagine that I put break of structure around here. It will make sense, because what you can see here are just wicks, right? But here now it makes sense, because why? This was the last break of structure to the upside, a change of character, then another change of character to the upside. This can also be another break of structure for the bullish, but let's leave it as change of character there, because why? The character changed here briefly. Oh no, sorry guys, I'm very sorry. If you are looking at it from the daily, there was never a change of character here. It was still a break of structure. Why? Because this was the last low here, and this low, if you look here, it is all wicks. You get, I remember I said I like to use body. It's all wicks to me, and then we had it break of structure here. But since we're using the 4-hour time frame, that's why you can see that we had a temporary change of character here. Does that make sense? Same way, if we go down to 15 minutes time frame, you see that there were several breaks of structure here. You get, so that's why you must understand market structure and order flow very well, because these are the intricacies that the market hides, so that it makes you to not have a good and sound reasoning in the market. Now, back to the daily time frame, I will still show you something. You see this point here. Remember, I said this is our swing high on the external structure. Here to here, swing low, swing high, break of structure happened here. And now we see the price making highs. Now, since we have been able to see our internal structure meet up to here, do we see it breaking further from this zone? Don't forget that this is a reprint. So, I mean, obviously, if we're trading it live, we would not have known that this was the highest point. Why? Because we anticipate that price will come here and break this or keep on going, okay? But this is the highest point, and this is where we mark as our daily high. So on our daily high, we want to see price come somewhere around the 50% and take it. But what happens? It doesn't take it. So let's go back to the 4 hours. Let's continue mapping out our structure. But on the 4 hour, what can we see? This was the last low, right? This was the last here, here to here. Somewhere around here to take out this one. But where can we see that? This was our swing low here. This was our swing low here. So we see that price as this high put in this low. You see that this low came here. Once again, what have we done? Change of character. Okay, so we have once again a change of character here. So this high has now put in this low. Now this did not make the 50%, I believe. So normally I don't want to call it a pure reversal. This was this low here. This was the first low. So this 50%. So would have expected this price here to come up somewhere around here before moving backward. So I would like to call another, this place my swing low. Let me just delete that. But within this whole market now, what can we see? We see it making another range of high, lower low, lower high, lower low, lower high, lower low. So from this high point, you can use this. Let's use this. Put in this low. This high did not break this low. Did not break this low. This low was taken out here. Let's be sure of that first, please. See a body close there, right? Bam. So this high puts in this low. If you draw a Fibonacci from this level to this level, what can we see? It crossed the 50. And this high puts in this low. This high puts in this low. So what do we have again? We have another break of structure. So don't forget, these are breaks of structures. This high puts in this low. This puts in this. So what do we have again? Break of structure. Now, remember when I said that we need the internal order flow and the external order flow to match before we can anticipate entering into a trade. Let's do one thing. Let's do one quick overview. I like going back sometimes so that we're always intact. Oh, our time is running out again. Let's round up quickly. Now we've seen this level to this level, right? This is the 50%. We can see that when it swung from this level, it took out this high and made this high. Now this had to retrace down at least 50% for us to see a continuation to the upside. So within this 50% and below, this is the discounted range. We want to be seeing how the internal order flow will match with the external order flow. The internal order flow from this level to this 50% is bearish. So what we're looking for is where the internal order flow will become bullish to match with this bullish order flow. It's what happened here. This order flow was external and it was bullish, and then it retraced bearish. Then this is where the change of character happened, whereby this high took out this high took out this previous high. This low, this was last break of structure here, right? And this was the high. This low now took out this high, and then there was a change of character. So in this whole circle here, you can now see that internal order flow have moved from bearish to bullish, which is now aligning with the external order flow. Please, if you understood that, let me just let me get a confirmation. Anybody, please, anybody, confirmation, please, or I repeat it again. Dolakbo, Sammy, do you understand?
Hello, sir.
I'm with you.
Okay.
Yes, I understand the part of the internal aligning with the external. What's the relevance of the several high and lows in the internal to that statement?
Okay, hold on. Okay, come again, please. You said that you understand
where the internal is now bullish like the external.
Yeah.
So we cannot look out for our entry.
Yes.
I know all that, but you were talking of several lows taking out several highs. Do I need that information too?
Yes, that is where we determine where there's a reversal in the market. Now, if we see this swing point, now this is a daily swing point, right? From this low to this high, that's our external swing point. Then we see this range of internal orders or this internal market structure making a series of higher highs and higher lows, right? But they are aligned, okay? Now, at this point here, where we'll get our high, this is the point. This is this high that failed, this high that took out this low, that made us to know that the market is reversing. This is the first point of being aware. So if you are trading in a bullish run and then you see that this point here was rated by this high, the character has changed from being a bullish order to a bearish order. You get it? So if we were to give it, if I was to enter into this market now, this is what I would do. Let me just give you my thought process. Okay, now I'm going from a daily time frame. I enter this market on a daily time frame. What can I see? I see that this high has put in this high, and this low puts in this high, this low puts in this high, this low now, this lower high has now put in this high. But what then do I see? Now, normally if I was trading this market, I would think that this one now, I would have been thinking this candle now, be saying, where will I buy? I'll buy around here or buy around here. No, but what happened? He kept on going. He kept on going. He kept on going. He kept on going. So then you can never know when this market is actually going to turn around and start coming back here. The only determining factor that makes you to know is when a low, a significant low was taken by a high. In this case, this is a significant low here. And this high came and took it out. Are you getting me? So now we now understand that the character has changed from a bullish character to a bearish character internally. Now, when there's an internal, when there's a discrepancy in price, whereby price is going higher and price is going low here, is good because then we know that the market is retracing back to a 50% level so that it can continue going upwards. Okay, now this is the first change of character. Change of character is very important because it makes us know when the market is reversing. If this price has come somewhere around here and now come here, I won't do anything in this market and come like this, come like this. I won't do anything. I'll wait till you break either this one or break this one for me to know where the market is going. Do you understand? So now, as it has taken out this low, it makes me now to now know that the market is reversing. Remember that when this low here was taken out here, it was a change of character. But what happened? The market came back to take this one, to align back as bullish, to give us this new high. So this high now has taken this low and caused a change of character, putting in this new low. And this new low, you see now it has been respecting it. Now the market has what? Changed to a bearish market. Now, up until this point here, this zone will soon end. So up until this point here, which of course, if we draw a Fibonacci, remember I said I was showing you my thought process, how I will approach the market on a daily basis. Where is that price? So I will draw my fib. My fib now will take it from this high to this low. Now I'm looking for where market will likely come back and bounce. So anything from this level, this 50%, is where I'll be looking to look for it. Then I'll look for a reversal around those areas. But we'll go to other blocks. So that will be a different topic for tomorrow. So as it crossed this my 50% line, anything around below from here to here that makes the market to start reversing, I'll be looking for buys. Are you getting that point now? So let me remove this 50% level so it doesn't confuse me. Now we can see that the price is here. Let's go back to our 4-hour candle. So now this 4-hour candle, we see that this high has put in this low, caused a break of structure. This was our last high. Don't forget this one here. Oh shit, sorry guys for using crossword. It's because of, I think we have just barely a minute left, or 3 minutes. So this is the high that puts in this low. Let me change that back to white. This is the high that puts in this low, causing this break of structure. So now what are we looking for? We're looking for how price can raid this low here, because this becomes a weak low and this becomes a strong high. But what do we see? We see that price came here, it pulled back 50%, when it came down. But what happened? This price did not take out this one. Neither has it taken out this high. Are you getting it now? But instead, we see that this high, this strong high, was now raided by this low. This low now becomes a strong low. This becomes a weak high. This now becomes our change what in character again. I think it's becoming interesting now, and that's where it gets tacky, but this is where it gets interesting. Now, when we had this change of character, where did it now take us to? It took us to somewhere around this high, or maybe this high. But anyways, we can just say this first. This took us to around this high. And what happened? It followed by, it came putting this low, and what we have, a break of structure. So now, as a smart money trader, when this high was raided, we'll now look for, when this high was raided, we'll look for the point where this high will lead us to, then look for somewhere within this range again on the 50% level to continue buying. And that now reiterates I will buttress the idea when I said that your internal order flow must match or align with your external. This is your external here to here. Remember, we are bullish. Now, we are now seeing where price is going to take us to, and the level of which it will take us to, that will now become a reversal. We can see that the reversal happened right here. Are you getting me now? It happened here. So one could have been looking for buys within this range. Now, definitely I could buy this market from around here if I had gone to a lower time frame. Let's say maybe 15 minutes time frame. Because then we would have seen, we'll learn that on multiple time frames, but I don't want to confuse you now. Do you understand? I want you to get the idea of, like I said, forget anything you know about Forex. Don't think about how you want to trade or how you want to start trading now. No. When we start, just learn it from a baby way of which I'm teaching you. If you see, I keep repeating words because I need you to get it and get it right. We'll go to multiple time frame, like on 15 minutes here. Instead of me entering this market all the way from up here, this would have been my point. When I saw the market did this, put in this low, put in this high, put in this sweep of liquidity, came up here, took out this high, came here, broke structure, break structure. This would have been where I'll be looking to. This area here is where I'll be looking to enter the market. Somewhere around, maybe here. Where did this one break? This one broke around here. This low. I'll be looking to take my positions from somewhere around this. There'll be another block somewhere around here that I'll be testing. The more I keep seeing it breaking the structure, I'll have entered on a 15-minute time frame. Okay, can you see the screen? Can you see the chart? Are we able to see the chart?
Yes.
You can see the chart, right?
Yes.
Okay. Is my voice loud?
Clearly.
Is my voice loud?
Yeah, loud and clear.
Okay, beautiful. Okay. So I think we stopped in one. We'll look at the break of structure and change of character. Now, Sam, in respect to what you said, what is the significance of break of structure and change of character, right?
Yes.
Okay.
Yes.
Now let's just use this. Let's just use this point from here to here. Now, this was a low that put in this high, right? So this is a trading range. So if I was to come and trade in the market any day, I don't need to come and be looking at all this candle and all that. All I need to really look at is between here and here. Do you see this?
Yeah.
Why? Because this is a range. It's ranging from here to here. So now, where is the market going to move now within this range? Because let's say price was here now. Let's say that price was currently trading here, right? You'll be wondering that, is this market going to go up or go down? The only way for you to know now, number one, is to determine where has the market been moving before now. Number one, you see that it's bearish, right? So that gives you number one clue that, okay, since this high has come here, it may likely come down and break this one. Number two clue is, what if I open a sell now and this market keep going up? Or let's say I open a sell here now and the market goes up.
They have to be on the 1 hour chart, this analysis.
No, I'm showing you and I'm giving you an example of why a break of structure and a change of character is important. I think that's what the question that you asked.
Okay.
So now, like I said, number one clue now is that the order flow of the market is bearish, right?
Okay.
So if we are now having a bearish order flow and then we are seeing a range from this low to this high, normally, since it's a bearish order flow, where do we expect market to go?
Down.
Good. So in anticipation of it going down, we draw a Fibonacci. Or no, we don't draw a Fibonacci. Fibonacci will be drawn from the previous high to low. This is from low to high. So what we are looking for here, this is already a 50% range. So the market is expected to go down. But in the situation whereby the market does not go down, then what do we now do? So in this range, you want to wait to see what market does. Since this is a retracement, because if you go to a 4 hour, you see that this market is a pullback. Look at it from this range to this range. This is the pullback. If you draw a fib from here to here, this is the 50%. You get. So anything from within this 50% is what makes us to know that the market might be getting ready to reverse. So when we see this level coming here like this, that's tested 50%, and we start seeing this market making lower lows. Do you see this now? One can now look to enter a position, and other block would have been put somewhere around here to enter this position here and take you all the way down. But like I said, we'll talk about that when we get to the teaching of order block. For now, you just need to understand why price moves the way they move. Now, can you see now that it has gone down? But here, as it has gone down, it hasn't taken out this low yet. So until it takes out this low, market is still ranging in this market is still ranging from here to here. Until this low is taken out, market is still ranging from here to here. This was the midterm high that was placed here. We expect that this would have taken out this high. That would have been a change in character. But since we're in the bearish order flow, we anticipate it to take out this low. You get? That's the, well, let's say, that's the expected expectation. We can only anticipate. That's the anticipated expectation. It's never a certainty. Now, you see that it broke here. So since it broke here now, this range, this is the significance here now for you. This range will no longer be from here to here, but it will now become from here to the new low. But now we've not been able to determine the low yet. So let's check. If it pulls back 50%, then this will be the new low. So let's keep going.
So the old high will change to a new high.
This old high now has been left. You are no longer looking at this high. What you are now looking at is this new high here. Because why? It has taken out this low. This high only becomes validated when this low, when this old low here has been taken out. Do you understand? This high is validated upon the breaking out of this low. The breakout of this low, this high becomes valid upon the breaking out of this low. Do you get my point?
So when a low breaks out, the next high is the new high.
Yeah, so this is the new high. This is now the new. Oh, we're still looking for the low yet. Do you see that? So we're still looking for the low. Okay, so this will now be the new low here. Are you seeing that? Because why? You see the market is still retracing. If this market goes down lower, this candle will also shift to become that new low. But already from the way you see our market has pulled up more than even 20%, you can already tell that this is the new low here. So now the market now becomes from this high to this low. What we'll now be looking at, anything from within this 50% and up is where we'll be seeing market to likely reach and then come back down. So you see that market is consolidating there within that range.
So how was that new high formed?
Which new high? This one here. This high was formed after we broke out this high. This high put in this low. So you have to now look for the high that took out the new low. So this was the high that took out this low. That's why it was formed. Okay. This high now took out this low. That's how this new high now is formed. So we can now get rid of this high. You see that now? Let me move this fib. So now we see the market still playing here. So now this is a new low here. Okay, you see the market has still gone down. So you see now the low is still going down. What do we see? So now from this high to this low, remember there's a break of structure here. So now we're looking at this high to this low right here. This is the new low here now, for now. What do we see now? Market is within this range. Now this is what we're calling range structure. If we go to a lower time frame now, we can also see things like this. This is what? This is a change of character. Why? Because it took out this high, this low, this low took out this high, this low took out this low, sorry, took out this high, so we'll now have a change of character here. But that would be looking at it from a smaller time frame. You get, this is also a break of structure. Now, what do we have here again? If we're looking at it from a smaller eye, this is a break of structure. This is the low that causes break of structure. What do we have again? This high now. Do you see that nothing took out this high? Instead, it came and took out this low. So what do we have? We have a small change of character here. This will be a change of character back to the downside. So this is the high now that caused this change of character. So we need that high to be readed. You see it. What happens now? This high now has caused another change of character on the smaller time frame. Now remember that on the bigger time frame, we have already set our change of character on this to be this high, because this is the highest high here on the 1 hour. Do you get? So on the 4 hour, I think it's 4 hour we're using. So now we now see that price has gone above, and then we have a change of character here. Let's go back to the 4 hour time frame so you don't get confused. So forget about all these internal ones right here. Forget about all these internal ones. Your focus should be here. This change of character. So remember now, that's why I always keep explaining, everything works in the same structure. Whether we're using 1 minute, 5 minutes, 15 minutes, it's all the same thing. You just need to be able to be making them to align on each time frame. Do you get? That's what's important. So when you go back, you watch this YouTube, you watch this video again until you internalize it. Then I'll give you assignments. So what we do now is that
recorded.
Yes, as this price has taken out this, as this high has taken out this low, we have a break of structure. This low, we anticipated it to be taken out, but what happened? It came to come and take out this previous high. So that's not a change of character. So it's no longer bearish, but it has started having bullish momentum. You get that now? So normally now, smart money now, or if you draw a Fibonacci from, let's assume that this is the high now. For now, we don't know yet because the price has not retraced very well. But now we'll be looking for a 50% level and below, which is a discounted level, to be able to buy from. When we are buying, we are looking for discounts. When we are selling things, we are selling at a premium. Do you get? So if you want to buy a commodity now, let's say you want to buy the Lamborghini I said, if you are buying, you want to be buying at a discounted price, meaning that you want to see where price can give you.
So the second to the last zone is the discounted zone.
Anything below the 50% in a buy is discount. Okay. Anything above this one is a premium. Everybody wants to buy things cheap and everybody wants to sell things high. Do you get it?
Okay.
So if you are selling your Lamborghini, like the contrary to the one I gave, the example I gave before, if you are selling your Lamborghini, you want to be selling it high, right? So meaning that you want to sell it at a premium level. You want to sell it for 300 million, even when it's valued at 250. But if you want to buy my Lamborghini, you want to be buying it at a discount. You want to see I'll sell it for you 60 million naira. All that is this 50% range here. So now I want to see if this, now we're looking to buy now. So where should we be looking to buy? At a discounted zone. Does that make sense now? But what happens? Price went even higher. So like I said, let's wait till we get the top before we can put our fib. Now, many times price will not always retrace to this 50% level. That's what you should know before it continues. That's why most time people feel that, oh, I'm not getting trades, or you become impatient. The market will test every aspect of you. It doesn't mean that later it won't come back to take or test those levels. Now, that's why I said that here, this was our high point here. But it never retraced. Instead, it just gave this small pullback and continue upwards as a break of structure here. So our new trading range. Now, it's important to know that trading range may differ. As small as this high to this low. Now, this is your range here. This high to this low. This is your new range. So you can have a range that is very big and a range that is very small. A break of structure happened here. And what do we see? This was the high here. Put here, we can still call this an high here. So we're seeing how price may get to a 50% level and go up.
Mm-hmm.
Is it going to take out that low? Let's watch. It took out this low. So what do we have again? Once again, we have a change character on the 4-hour time frame. This is a change of character here now. It gets very tricky, but you just have to be patient. Now, things may not
Keeps
make
changing character. Lately, the past 1 week, this market has just been taking money from people, from us.
Exactly.
I don't know. Stop loss.
It's because of your knowledge. It has not yet been fine-tuned.
Like the Euro AUD now don't hit stop loss too.
The Euro AUD. Yes, I saw that, but I mean, you buy there, I guess. Like, if you want us to go there, okay, let's just finish this. I think we'll run through there now.
Your buy is still on, as your stop loss not activated.
Yes, our stop loss hit on, I think, 10 pips. You see, that's the beauty of it. Just 10 pips stop loss, but my take profit is about 70, 80 pips.
You don't get to lose too much. Yes, that's the beauty.
We'll get there now. I'll probably, let's just conclude this for the sake of the recording. So now we have a change of character, meaning that what? The bearish momentum is beginning to break to the bullish momentum beginning to change to a bearish momentum. So now we see that price has taken out this low here and caused another change of character, meaning that we anticipate price to keep going down. Okay. Now, if we're anticipating price will go down, what do we need? We need another 50% level, so we can buy, so we can sell at a premium. So we can sell at a premium here. I think that's 50%, but let's see now, because now we're trading within this range of this high to this low here. This is the low for now, because this has already done more than 50%, right? So let's see if it's going to take out this and be a breakout structure.
Are we looking to buy?
No, this is sell. This is a sell.
Okay, I thought it was a bullish.
Yes, well, we are. You know, this topic we are doing is called market structure. So we're not here looking to buy or sell. Well, I'm wanting you to understand market structure, how the market moves in series of higher highs, higher lows, so that you get the concept. This now is a change of character. That's why when this level broke, why did you not think that this price will come back and raid here? It did not, but instead it came down again to break this one. That will tell you that the character has changed from this bullish momentum to a bearish momentum. That's why I said leave everything you know about Forex for now. Follow the way I'm teaching you. Market structure is just about ups and downs, high and lows, external swing point, internal swing point, rate structure, and the other break of structure and change of character. So this is the last part we're doing, which is called break of structure and change of character. This will make you to understand where price goes and how it moves. So what do we have there again now? This is our low here now. This is our new low. It has been taken out again. Trying to fast forward this thing. This has a change of character here, somewhere around here. It's a change of character. This high to this low becomes our new range. A change of character happens somewhere around here. You'll see it clearer maybe on a 1 hour time frame. So from this low now took out this high. So this becomes our new high and the new low here. What happens? Another break of structure. That I think we have a change of character there. Okay, I think that's where we are today. I think that's where price currently is trading. So have we understood break of character and change of character and break of structure?
Yes.
When you go back and watch the videos again, you understand better. For now, you need to just rest, internalize it, then go back. But that thing to take on from this video now, for a recap from a daily time frame, is that the market make a series of higher highs and higher lows. It's like the scientific saying where they say that what goes up must surely come down. Okay, so we don't just see the market going up like that. If not, everybody will be billionaires, right? So the market must go up, come down, go up, come down. It must make lows, highs, it must rest. If you jump up, you must surely hit the ground. So it is in finding those points where it's finding those points where, as you are jumping, as you're coming down, you want to know when you are jumping again. That's what makes us now the traders. That's what makes technical analysis, price action different. So in doing that, we look at it from a bigger time frame. If you go to space today, you will see the planet will become small from space. But if you're on the ground here, you cannot even see your next neighbor's house complete. So that's the essence of bigger time frame. Bigger time frame makes you to see what price is doing on the bigger time frame. And everything that price is doing is still what we have been teaching. It's still the same highs, lows, and break of structure and all that. See weekly time frame here. Every candle here now represents a week. What do we have? High, low, break of structure here. High. You see, it didn't take out this one. It's a week. Low. This is break of structure. Price came here. It didn't take out. Remember, this was the high. This was the low. This was the high. Low. It didn't take out this high.
Yeah.
It didn't take out this high. So we still have price trading within this range. Now, this weekly time frame. We have price trading within this range to this low range here. And what do we see? Price has been consolidating here. So within all this weekly time frame, you will now see other structures. Or do you get forming internally? I mean, do you trade the weekly time frame? You can't trade the weekly time frame. No. You only use the weekly time frame to know the weekly buyers. Now, before anything happened in this market, was all the way here. So you can imagine how long you had to wait if it's only weekly time frame you're trading. And then we had something happen all the way here too. So what first happened? This I put in this low. This low took out this high. So there was a break, there was a change of character here. This high now took out this old low. And that change of character. Then what happened? We don't have, this high has not been taken out yet. This high has not been taken out. So currently we are still in a bearish order flow in the weekly time frame. Because why? There was a change of character. So we're anticipating it to go lower, but it has already passed the 50% here. It retraced here and it went up. So ideally, we start changing time frame to like daily. You can see that the market is now looking like a bullish order flow. Why? Because now the daily now, we're no longer looking at this big weekly swing points. We're looking at this high, low, high, low, high, low, high, low, high, double top, breakout. This is what a change of character here. Are you now understanding the concept? So the momentum has changed now from bearish to bullish. Why? Because this price took out this previous high. This previous high failed to take out this previous low. So now this now becomes a change of character followed by a break of structure. Up all the way here, 50% break of structure. Up here, 50%. So now we're looking for our price. We come and raid this level now. Are you seeing it now? This will now be the new break of structure. So until this price can come and take out this level, we are still in a bullish order flow. So price is ranging from here to here. Now within this price ranging from here to here, let's draw 50% from this daily and see what it looks like. Our 50%, our discounted zone is from here down. So we're looking for where we can take a buy from this area all the way here and then swing all the way high. But by doing that, we have to now keep going down into smaller time frame to know what price is doing. You see, price now has changed character. Oh, we're running out of time. We have to round up. So I have to go into all that smaller time frame, like the 4 hour, to see what price is actually doing there. And that's how we can trade this market. From this 4 hour now, which is one of the best hours for identifying. We'll also learn time frames later. We see now that there's a change of character, break of structure, change of character. Price is here, break of structure. Now we may also look at this point here as a change in character, somewhere around over here. Here, change of character here, price line going down, break of structure. Now, what do we have here? We are looking at another possible change in character. So we may see price now making series of highs to come and test these high points here. Do you now understand? So
yes,
that's all for market structure. We're not going to go for
it's at the verge of changing character now.
It just changed
on this 4 hours
no, it's at the verge of breaking structure. We just changed character here. This was a buy. We had the change of character around here.
Yes, yeah.
Around, you can put it here, some can put it here for look at it bigger. So we're looking at this thing either because now it has taken out this high. You get, so now this is a change of character here. So we're looking for price to come down to this area and then continue upwards. Do you understand?
Yes.
Yes, we need price now to come down here around.
So the character has changed from a sell back to a buy.
Good. So we need price to come back to around this area and then all the way up.
Okay.
So that's why we don't rush. You just come now. You can see, oh, okay, I'm marking my order block to be somewhere around this area here. So price can come here, touch it to your order block, and continue
discount.
50%. Then I'm going to be teaching you next class on order blocks. In order blocks, your learning outcome are going to be able to identify a valid order block. Then we're going to understand the real concept of supply and demand zones. Then we'll also be trading it inside this market structure we've already discussed. Do you now understand? So we'll teach order blocks. We're now going to put the order blocks lessons into market structure and then see how we can use different time frame to enter different trades at different times. You get now. So that's for that now. So all right, ladies and gentlemen, take care of yourself and have a wonderful time.
Thank you, sir.